Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 6:30 in New York. It is Thursday, February 15th, 2018, and this is the Daily Report for Gold and Silver. After having such a dynamic upside move yesterday in gold, we did have a little consolidation with April futures trading off by about $1.70 at $13.5630. Spot was up a couple dollars on the day. Silver also tracking lower, down about 5 cents at $16.82. And traders, that's all in light of a strongly lower U.S. dollar, losing 54 points, about 0.6% at 88.46. And remember, our key number in terms of critical support is 88.48. Dow Jones Industrial Average, a triple-digit gain, up about 300 points and back over 25,000, 25,200. And Bitcoin flirts with 10,000 once again, with the CBOE at 10,000 and the CME's futures contract at 99.50. Traders, after yesterday's impressive price increase, the fact that gold futures are currently down about $2.40 is actually impressive. We're not seeing any kind of real backsliding, and we're seeing some consolidation in the market. And I believe that this consolidation is the precursor to gold prices taking out the double top that exists at roughly $13.70. And that would be based upon these tops right here. And traders, that is our first objective or price target for our current trade, in which we went long at $13.23. That is my first price objective. Personally, I think we will see much higher pricing than $13.70. But first to our current stop. If you recall from yesterday's show, we did send out a special trade alert. We made the recommendation to move your stop up now to below the low of yesterday's candle, which came in at $13.19. I am now recommending, and I will follow this up with a trade alert, that you trail the stop up yet one more time to $13.33, which is $2 below the 23% retracement. It also corresponds to a 61% extension, which creates a harmonics. And so that to me is a very, very strong area that I believe gold pricing needs to hold if it's going to continue in its upward momentum and upward move. The other rationale behind it is not only is it a logical place to trail our stop up to, it is our first stop for this trade, which actually locks profit into the trade rather than simply preserving capital. So traders, take your stop, which is currently at $13.19, and move it up to $13.33. And traders, in terms of my upside target, where I think gold pricing could head to on this current rally, my target sits at $13.94. Now, that particular price point is based upon a Fibonacci extension in which I look at the price range from this rally that occurred last year, July, up until August. And then what we do is we fix the beginning of the extension to start at 1241, which is the beginning of this current rally. And that's, first of all, where we got this 61.8% retracement, but we've certainly taken that out. And my sense is, if in fact we can exceed these former tops, we should have enough momentum to take us just shy of $1,400 per ounce. In terms of a time parameter, I think that that is achievable by the end of this month, beginning or middle of March. And traders, to achieve that upside target, we are definitely going to need some help. And the help that I'm speaking about is current dollar weakness. The dollar right now is trading at 88.52. We know that there's an extremely critical area that occurred at 88.58, which is a 61.8% retracement of this extremely long data set, going from 78.79 up to approximately 104. A solid break below this price point on a closing basis, and this is the lowest close that we have seen since October of 2014, right in here, we could easily see the dollar return to a free fall, because in terms of key technical support and resistance areas, we don't really get one until the 78% retracement, which is roughly 4% lower at 84.50. It matches up with these tops here. It also matches up with this small correction or retracement that we saw as the market was moving higher. And so therefore, I am putting a lot of weight upon this price point. And traders, the Dow Jones Industrial Average has once again crossed back above the short-term moving average, this being our 50-day moving average here and our 200-day moving average here, for the first time since the Dow corrected by roughly 10% from these all-time highs here, just above 26,400, down to these lows at around 23,400. As you know, recently, although silver pricing has been moving higher, has been moving roughly in tandem with gold pricing, I have been more bearish on silver than I have on gold. One of the primary reasons to that is the fact that it was trading below both the 200-day and the 50-day moving average, and the 200-day moving average is above the 50-day moving average. Yesterday, I pointed out the fact that we had closed just slightly above or at the 200-day moving average, but if you look at today's candle, it is a doji candle in which you don't see any kind of a real body. Silver is currently trading down about 5 cents, but it is stuck right here at that 200-day moving average. Again, I still need to see a solid close above this particular price point before I get more bullish. And traders, lastly, I do want to take a quick look at Bitcoin and Bitcoin futures. The chart we're looking at is a daily chart off the CBOE, which contains a single Bitcoin in each contract. Today, we had the cryptocurrency close at $99.60, down $135. But more importantly, as we've spoken about over this last week, I believe that we'll probably run into substantial and major resistance at approximately $10,000 per coin. That's precisely what we are currently seeing. We did take that price point out, but we are once again below 10,000. The other thing that I see is when we look at recent activity, we can see that this particular price point, 10,000, was a supportive area before the cryptocurrency plunged below that, actually trading to a low of approximately $6,000. Now that has resulted in a 30% gain from these recent lows, and so some sort of a correction at this point can be expected, and I also believe that it will be healthy if the market corrects to 23 or maybe even 38% in terms of a retracement level. I would look for 8,000. And therefore, if the market does trade under pressure and begin to trade lower, I would look to go long Bitcoin futures at $8,000 per coin. Traders, I know I might sound like a broken record, but it's all about the dollar. Right now, the dollar is back to a critical area, and in fact, we're seeing a close that is lower than any close we've had over the last month. We are just below, on a closing basis, a critical level at 88.58. The key is whether or not we see a substantial break below this price point, because if we do, I believe we will see the dollar go into an extended free fall, trading down as low as 84.50, a 4% drop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.